Hello, everyone, and welcome to today's episode. I had a little glitch earlier with I'm actually using the same headset and microphone that I used earlier. It's just a different computer. I don't know why all of a sudden it's not working. So I'm using my other computer with my paper trade account, but wasn't really looking to talk too much about trades. Last week was a so-so week. Actually, not a very good week. I ended up red for the week. Not by much. I took a lotto trade on something I probably shouldn't have, and which I don't usually do, and it was an uphill battle from there. So I lost 100% on that one, and with that, it just ended up red for the week. But this is my paper trade account, so these are simulated values. Nothing matters here. But I'll show you what I traded today. In the end, I pretty much, I was green for the day, but just barely. Basically, I broke even for the day. Let me bring my other screen up so I can see. I got in NVIDIA calls at 10:28 this morning, which was right after the open of this candle here. The reason why was because it broke above a double top here. You probably consider that a triple top if you count this one. Maybe even a quad top if you count this one, but I don't usually count the very next one if it's, I guess you could count either way. Anyway, that's why I entered. I got in at 10:28 this morning. I paid $1 per contract. Part of the problem might have been that I played a little bit too far out of the money. There were 175 calls and it was trading around 168 at the time. So it didn't move as much as I would have hoped it would have. It did get up to, I think, $1.13. Let me see here. Let's see what it got to. I have it up on my other computer. I exited the trade at 11:23. So it actually got up. It got up to $1.15. And I think I actually had a sell order in for one at $1.10, and I did sell one of them at $1.10. I had 3 contracts, sold one at $1.10. I think I had a sell order in at 117 for the second one, and it only went to 115 and it pulled back. Right here you see we had a bearish engulfing candle right here, and I didn't want the trade to go red, so I went ahead and stopped out. I think I sold the other 2 at $1.03, so that the 2 that I sold at $1.03 basically paid my commissions and fees. I think on that trade I might have made $10. Maybe 12, probably 12 or 13. 16 overall, but after fees, probably closer to 12. Second trade I got into was Apple. Got into Apple on a, let's see, these I believe, yeah, these are old. I didn't have these charts set up for today because I hadn't planned on using this account for any charting today, so bear with me here. I have to figure out what happened with the microphone, so I don't know what the problem was there. We kind of fluttered around right here. You see we pulled back a little bit at the open, then a big pop, then a little bit more profit taken, and it kind of fluttered. It consolidated right here a little bit. I entered Apple calls at 10:39, which was right here on this doji candle. Entered right on this doji candle because we had a 921 EMA cross, which is, you can see right here, 921 EMA cross. I entered calls. I paid $1.21. They actually made it up to, I think I had a sell order in for $1.35 on one of them on my first contract, and they made it up to, let me take a look here. So I got in at 10:39. They made it up to $1.35. I had my first contract set to sell at $1.37. They made it to $1.35, right at 10:57. So it was actually right here in this candle. It made it to $1.35. My first sell order was $1.37. It didn't hit. Ended up, came up here. I stopped out. I didn't really stop out. I sold at 11:30. So right at the beginning of this candle, I sold. I was getting ready to leave for lunch. I didn't want it to go red on me. My Mondays haven't been great, so I didn't want this trade to go red. I sold for exactly what I paid for it, so I was out fees on that one. Based on what I made off of Nvidia, I probably netted $10, $11 today. Not a real good day, but it's better than being red. Which leads me to the reason I decided to do a video today. I hadn't done one for a while. I've been really busy, so I haven't done a video for a while. When we have a big gap up like we had here, generally what happens, I don't like trading days with big gaps, because one of three things will happen. Number one, we have a sell-off and an all-day fade. Number two, we continue to run all day, which if it runs all day, it's hard to find an entry, because sometimes you don't get pullbacks, or you don't get pullbacks to support levels, so it's hard to find an entry. If it fades all day, it leaves you wondering, is it going to fade? Is the sell-off going to stop and then pop back up? So you look for an entry at support there. Sometimes you find it, sometimes you don't. Sometimes you think you found it, you buy calls, and it fades all day. The third option is it chops all day. What I've seen happen, and you can see it right here, sold off right at the open, people took profits, then it popped, then it sold, people took profits here, and then it just kind of chopped all day. That's why I don't like trading. I don't like big gaps like this. Gaps to the downside are a little bit easier to trade. Fear is a stronger emotion than greed. When the market gaps down, people are more inclined to sell their positions than people are inclined to buy on gap ups. People panic when the market drops, when it gaps down. People will panic. Stop losses are triggered. People get out. So it'll drop. There's a higher percentage chance it's going to drop throughout the day on a gap down than there is a percentage of it running up all day on a gap up. Just my experience with my number of years doing this. So for that reason, I just don't like gaps. I'd rather large gaps. 30-point gap up, 30-point gap down. That's great. I love that. I don't like opening flat. I don't like opening with huge gaps. Those are the hardest ones to trade. So that's what I wanted to talk about here. And you go back and look when there's huge gaps. Look at huge gaps and look what happens. Most of the time you'll see this. I think we had a gap Friday. Friday it just kind of ran up all day, and then it chopped. And that was on a pretty good sized gap up. Apple gapped up $3, closed at around 201.80. Opened Friday at about 204.30, so about $2.50 gap up. And if you got an entry here, great. If not, if you ended up here, you're kind of screwed. So for that reason, something else I want to talk about, and this is what actually led me to find out that I had a problem with my microphone, because I saw this after I uploaded a video. I went to do another video because I saw this and wanted to do another video to show you what I was looking at and why I was bummed out that I missed this entry. And when I did that, I realized that my microphone didn't work. So anyway, as I was uploading the other video that I did earlier with no volume, this happened. You see, we have the 100 simple moving average. We have a Fibonacci retracement. We came down, touched the SMA, almost touched the fib. Then you come over here with a hammer candle. Those of you that are experienced with candles know that a hammer candle is at the bottom of a downtrend. It's not much of a downtrend, but it is a downtrend here. It's at the bottom of a downtrend, and the tail is at least twice the size of the body. You'll see that up here. Select patterns. You'll see hammer candle. If you come over here and look for hammer, now this might not work because it has in the past it has been blank when I've tried to do this. Occurring after downtrend, short body located on the top half of the trading range. It doesn't talk about it being twice the size, but if you're familiar with Steve Nissen, he'll tell you for strict criteria the tail is twice the length of the body. Anyway, hammer candle here at the bottom of the downtrend, followed by a bullish engulfing candle. It's not a very strong bullish engulfing candle, but because we bounced off of a simple moving, and in my experience, 100 simple moving average is pretty important level. Bounced off the 100, almost touched the fib retracement, hammer candle, followed by a bullish engulfing candle. And if you want even more confirmation, I don't have it on here, but the Hall moving average, let's see, Hall moving average, let's put that in here because I had that up on my other chart, my other trading account. Change this down and up. The Hall moving average changed to green right in here. If you're a believer in the Hall moving average, it's not bad. I don't use it for it's a last resort I look at. But even better, we have a 921 EMA cross right here. You can see this indicator here, this spike indicates that we're going to have an EMA cross. It hadn't quite crossed yet. My entry probably would have been right at the open of this candle. Normally I'd say wait because this isn't a real strong bullish engulfing, but we had one level of bullishness here, two levels here. It bounced off of two support levels. That's two bullish indicators. Hammer candles, three bullish indicators. Bullish engulfing is four bullish indicators. A 921 cross that's most likely going to happen, probably 90% chance there's going to be a cross here. The only way there's not is if this next candle, big red, and pulls it down. And even then it still might have crossed. So that's five different bullish indicators. If you want to throw the Hall moving average in, that's six. We had six bullish indicators right here, all flagging right about 3:30, all signaling. If you would have entered the same calls that I did right here, let's go see. I traded the 175 calls for this week. So let's take a look at 175 calls. Do copy. And there's the calls. My entry would have been at 1536, 336. Right here, they were trading at $1.07. You can see right here, trading at $1.07. They went up to $1.69. 60% gain if you would have held out to here. I don't like trading after 3 o'clock, but seeing all of these bullish indicators all together within, what is it? Let's see, we bounced off, say, let's call it right here, we bounced off. This is probably what started everything. 3, 6, 9, 12, 15 minutes. In 15 minutes, we had 6 bullish indicators show up in a 15-minute window. To me, that would be a no-brainer to go for it. However, I didn't see it. I was working on this video, not blaming. Yeah, you're not going to catch them all. You can't catch them all. NVIDIA is one of the charts that I have up on my main screen. I just didn't see it. I was busy working on this video. So anyway, Just something that I wanted to point out. Like I said, I was uploading the first video, and I happened to look over and I saw this after the fact. It was already up about here when I saw it, and I thought, well, I'll do the video tomorrow on this. And then I thought, I know me, I'll forget. Let me just go ahead and do a second video. And I actually recorded a second video, and I went to hit the playback I just wanted to check something on it. I went to hit the playback, and I realized there was no volume, no sound. I don't know what happened. I got a new headset. I have two computers. I have a desktop computer with 3 monitors and a laptop with 2 monitors. I have a headset plugged into each one of those. I got a new headset last week because my other one, the foam cushion things, whatever you call them, on the ears were falling apart. So I got a new headset, had that headset plugged into my laptop. The headset that used to be in the laptop, I plugged into my desktop, and that's where I went to record the video today because I traded my real account from the desktop computer. I don't know why. It looked like it was working, and for some reason it wasn't. I just tried to play around with the settings. I have Windows 7 on that computer. It's not recognizing the headset for some reason. I actually tried this, and it's the same headset I'm wearing right now that I'm doing this video with. My new headset that I got last week, I plugged that into the other one, and it's not recognizing that one either. So it's something with the operating system. I'm not sure what's going on. I'll have to troubleshoot that and try to figure it out. But anyway, like I said, I just wanted to get this video out. I thought it was important to show this. This is something I look for. You know, if I have 6 bullish indicators and nothing showing negative, the only negative I could possibly see is the stochastics are slightly high, and it's 3:30 in the afternoon. That's the only negatives I see in the stochastics. That doesn't hold much weight with me. Stochastics can be high and stay high for a long time, so that wouldn't have influenced my decision in any way. The only thing that might have would have been 3:30 in the afternoon, but I have 6 bullish indicators. The only thing that would try to talk me out of it is the time of day, and I wouldn't have hesitated to jump in this if I would have saw that. So just wanted to throw that out there just to show you kind of like what I look for. I like to see at least 2 bullish indicators before I enter a trade. You know, right here we had a bullish engulfing candle. I would not have entered here simply because there's no second indicator. I guess you could say we had resistance here, and old resistance becomes new support. Kind of had a little bit of resistance right in this area, and it held that, but I don't really, I wouldn't have considered this support. Bullish engulfing candle, I wouldn't have traded that, but it would have worked out probably. It would have been a decent trade. But there's not a second level. I need to see at least 2 levels in most cases before I enter anything. You see right here we had, what is this, a hammer candle right here. It would have worked out in the end, but you probably would have stopped out here. Hammer candle, technically from a technical standpoint, you watch any of Steve Nissen stuff, he'll tell you stop out on the hammer candles closed below the bottom of that hammer, which was right here, and it closed below the bottom of that hammer. So technically you would have stopped out on this trade. Now other people look at things differently. I know a lot of traders would have looked at probably this level for a stop out if you're aggressive, a little bit more risky, but you know, you might have stopped out. Now if your stop out's down here, you're going to stop out of less trades, but the stops are going to hurt more. If your stop is the bottom of this candle, this hammer, it wouldn't have hurt much, wouldn't have been a huge loss, but you would have stopped out nonetheless. It still would have been a loss. So it's all in how you like to trade. I wouldn't have traded this hammer candle. No way would I have traded that. The only thing that could possibly show a second level besides a hammer candle would be that was in the cloud, and the cloud offers support. It's not strong enough for me. I need more support than this to enter. This here I would not have entered. This bullish engulfing would not have entered that one. Here, absolutely 100%. I would have entered 100% of the time when this happens. So anyway, that's all for today. I don't want to try not to drag this video out too long, but I just wanted to show you that. Thanks for watching, and bye.